Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. For today's video, I wanted to go over the entire price history of Bitcoin and then share with you guys my long-term Elliott wave count as we're getting over 10 plus years into this Bitcoin bull run. It's important to understand where we could potentially see a major cycle topping point, and I'm not talking just about one of your normal one-year bear markets. I'm talking about a multi-year bear market in which we would actually see a true cycle top on the Bitcoin cycle. We're going to go through here, talk about what we could see long-term over the next 4 to 5 years, explain how many more cycles do we really have before Bitcoin either becomes too stable to have big bull runs or before a major crash actually takes place. Lots of really cool information to be covered today, so make sure you stay all the way to the end so you don't miss out. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure you guys sign up and join the Discord server or download my free ebook. Links are going to be provided for you in the description for the people that want to go ahead and sign up for both. Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. Alrighty guys, so here we are taking a look at Bitcoin on the dollar. This is going to be going through the entire price history of Bitcoin, and I'm going to be sharing with you guys where I think that we are, how much longer we have in these cycles, and until at least a multi-year cycle top, right? And so this is important to watch out for because of a couple different reasons. Reason number one, cycles don't last forever. There's always going to be a major corrective phase that takes place. Inside of Bitcoin cycles, I believe that Bitcoin has never had some multi-year bear market simply just because of the fact Bitcoin is still a very undervalued asset. And I don't believe that the cycles are over right now by any means. I don't believe that we're starting a multi-year bear market, but I do believe that this is something that will come inevitably, whether it's the next cycle or maybe we have one more cycle after that. I'm going to bring a couple different thoughts and reasons to your guys' ideas and trading plans just so that we can cover some thoughts that I've been having and really just talking about how long something takes to get mainstream adoption. Now, when it comes to Bitcoin, let's start off by removing all of our drawing tools here, and let's just take a look at the entire price history. And I want to share with you guys my long-term Elliott wave count. Now, one of the big reasons why I think that Elliott waves can be really important is because inside of a market like crypto that is so volatile, that is so impulsive, we see these big upswings in price, we can analyze Elliott waves very accurately, or at least a lot more accurately than, in my opinion, you could elsewhere. And we see altcoins, we see Bitcoin follow these Elliott waves so nicely, and that's why I think that Elliott waves actually have a really good way of explaining what we're actually seeing over the last, basically 2 years of Bitcoin price history. So let's go through here and let's actually analyze where I think we are on the grand scheme of things. Now, we're going to go all the way back to the very beginning. We're going to come all the way back down in here to our very first cycle. Now, you can draw this a couple different ways, but personally the way that I see this is obviously our one wave. This was the very first impulse that we ever made. This is what I view as our three wave, the next major move in that breakout. And then we kind of see that we go from basically 16 cents all the way up to $32. And so this was a huge, 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 huge move. Now, generally, your wave 5 will be relatively the same size as, wave 1 or wave 3. Sometimes it can get overextended like this. And generally, you would draw your wave 3 as being something more, a little bit bigger. You'd want the wave 5 and wave 3 to line up a little bit more closely. But when we look at the Bitcoin cycle all the way back down in here, we can see that we pretty much see we see 3 impulse waves just inside of that 5-wave extension. And so I look at this as a wave 1, a wave 3, and that entire extension from 16 cents to $32 was basically an extended 5th wave. Makes sense why we could see such a massive extended 5 inside of our first Bitcoin cycle, because that really was one of the most parabolic cycle, if not the most parabolic cycle, as far as ROI. I mean, we started at 5 cents and went straight to $32 relatively quickly in a pretty short amount of time. And so that's pretty much what our first cycle looked like, and this would complete our first impulse. Now after an impulse, you have a correction, pretty much just this, an ABC back down, and then this is what starts the next major impulse in our cycles. Now, this is where things get a little bit different. A lot of people draw their Elliott wave impulses when looking at the Bitcoin cycle as this being a one wave. This was our first 3 sets of impulses. And for you guys that maybe don't actually understand 100%, what Elliott waves are supposed to look like, let me share with you guys an example here. So I'm going to come over here and stretch this down at the bottom so that we can learn a couple things just off of Elliott wave theory. Now, this is going to be your classic example of an impulse. Every impulse has 3 impulse waves. We have odds are impulses, evens are declines and corrections. So we have 1, 2, 3, 4, and then 5. After the top of a wave 5, that completes an impulse, and then we get an ABC correction back down. There's multiple different kinds of corrections, but just as a rule of thumb, to make it simple for people that maybe don't understand, we're just going to draw ABCs, right? And so this is what an impulse looks like. We have 3 sets of impulse waves, then we have a corrective wave, and then that completes our first impulse, right? And so that would be down here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. ABC, ABC. That would be wave 1. This entire move from 5 cents to $32 back down to $2, that would be our wave 1. Now this is what starts our wave 3, and this is where it gets a little bit different. A lot of people draw their Elliott waves like this. 1, 2, 3, 4, 5, and then that completed our wave 3. And they're drawing every cycle as an impulse. The problem with that is if you're drawing every cycle as an impulse wave, then that would mean that 2018 would have been the top of our wave 5, and it would have been the top of a multi-year cycle and a big picture trend, right? But we can see that we didn't correct for multi-years. We had our typical length of time in a bear market, and then we made another new all-time high. And so we can see that that really wasn't the case. So that can't be our impulse. It has to be a little bit different. And that's why I'm bringing you guys my opinion on how I personally view this wave count, because what it shows is that we really do have more time in our cycles, but I think that we're getting closer to a true cycle top of Bitcoin than most people are willing to admit. I think people are a lot earlier. Well, I think people believe that they're a lot earlier than they are at this point. And I'm going to explain why. So first things first, where's wave 1? Well, I view wave 1 as right here. This is obviously our first impulse. Now, where is wave 3? Well, wave 3 I view as being this entire move from $4 all the way up to $1,150, right? And so our bear market in 2014 all the way down to the beginning of 2015, that bear market was our corrective wave 4, right? And so that means that our entire 2016, 2017 bull run was the top of our wave 3, right? So we have 1, 2, and we're going to actually make these impulse. We're going to make these smaller. Same with this cycle over here. These will be minuscule. And then we're going to make them a little bit smaller, just so it's easier for you guys to see when we get our big picture Elliott waves. So right now, all that we're drawing is our subwaves, right? So this little tiny impulse here, 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 and then this correction there, that's a subwave. And then this little tiny impulse here, 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 and this correction, that's also a subwave. So that's what we're drawing right now. We're going to wait until we get our big picture, our thick lines right through here. We're going to draw that here in a little bit. I'm just trying to map out where we are on the smaller scale. So this was our first impulse here. This was our first correction. This is wave 1. This next impulse is wave 3. We have 1, 2. Now, instead of drawing this entire cycle as the top of wave 3, I don't view that the same, because after wave 1, we see 1, 2, 3, 4, 5. So really, we only ever saw the next set of impulse waves inside of a 3-wave, right? Because keep in mind that even if we could scrunch this chart in further, there would even be more sets of subwaves inside of this subwave. Theoretically, you could. So within this subcount of a subcount, we see 3 impulse waves. 1, 2, 3, 4, 5. That's why I view this as only the top of a major 3-wave. That entire bear market in 2013, 2014, that was just the top in the corrective phase of our wave 4. So that puts us right here, right? Wave 3 and wave 4, that's right here. Wave 3 and wave 4. Now wave 5 was our 2017 cycle. And so this takes us to the top of our cycle in 2017, the beginning of our 2018 bear market, and that's where I view us being right here. This top of the 3 wave was 2017, right over here. Now, if we come a little bit further ahead of time and we get over into our most recent cycle, now how does this stack up to where we're at today? Well, obviously our move to 14K all the way back down to 3,800, that in my opinion was very obviously a one-wave impulse. Now this takes us to the move into new all-time highs, the run up to 65,000, and potentially even the move to 69,000 depending on how you're looking at this. And you can look at this in a couple different ways. Now how am I looking at this? I'm looking at our first top is actually being in April of 2021. And this entire sell-off that we're seeing is just a 4-wave correction. And we're still waiting for one more final 5-wave to go before this big picture wave 5 impulse is over. So if you haven't by now understood where we're at, let's take the big picture Elliott waves and let's draw them over this so that you can see where I think that we are, what I think that we have left to complete before this is done. So our first set of subwaves went from 5 cents to $32 back down to $2. That is wave 1. We're going to draw wave 1 right there. Now our impulse from $2 all the way up to $20,000 was our wave 3, in my opinion. And these are our subwaves. 1, 2, 3, 4, and then 5. All the way up to here. That was the top of our wave 3. Then we get a 4-wave correction. That was our 2018 bear market. And now we're waiting to complete our final big picture cycle. This will be the completion of everything. So we're going to make those some thicker lines, and we're going to zoom out so that you guys can see. We're going to drag these over here. Let's stretch it out a little bit. Now that you guys can see our big picture Elliott waves based off of this. So we can see that inside of every impulse we have 3 subwaves. 1, 2, 3, 4, 5, ABC. 1, 2, 3, 4, 5, ABC. Same thing with wave 3. 1, 2, 3, 4, 5. It was just a much bigger cycle. And then when we get into wave 5, that's basically where we're at today, guys. And that's why I think that we're at a very interesting point. Now, the reason why I believe that we still have one more cycle to go at the very least, keep in mind that we could actually be in a bigger fractal of wave 3, and so we could actually be making a bigger cycle. There are a couple different wave counts, but the way that I'm personally viewing this is I think that we have at least one more major impulse to go before we have some multi-year bear market of some kind that stretches way, I don't know how it'll look, but it'll just be a very long period of a downtrend. It'll be the top of a multi-year impulse, right? Because keep in mind, guys, all of our bear markets have been relatively the same. This one was about 6 months. This one was a year. This one was a year. This one is looking like it will most likely end up being about a year. So our last 3 bear markets have been about a year in duration. And so our bull markets have been about 3 years. 3 years impulsing, 1 year bear market. 3 years impulse, 1 year bear market. And so far that's been the equivalency of every single one of our cycles. Basically taking out the example of the first one and starting it once a bear market began, because there just wasn't enough liquidity back then to really know. But when it comes to our top of our major wave 5, we would expect a multi-year bear market to ensue after that. And another thing I want you guys to remember here is the average rate of adoption is anywhere from 10 to 15 years. 10 to 15 years is about the time that it takes for something to get massively adopted, whether it was cell phones, whether it was televisions, whether it was refrigerators, all of these random little things. We can look at the graphs of all of our electronics, all of our little things that we've used throughout time, even random stuff that, you wouldn't really even think about, like toys. We can look at graphs and we can see how long it took before they were in every single household in America. And a lot of these major technological advancements that get mainstream adoption quickly, they end up getting adoption anywhere from 10 to 12 years or 10 to 15 years. And so where Bitcoin is at, Bitcoin's ledger went live the very, very beginning of 2009. And so 2009 all the way to basically 2023 to 2024, that's putting us right in the middle between that 10 to 15 year adoption. It's taking us all the way closer to the end point of that 15-year cycle. And so if that's the average rate of adoption that it takes before something's massively adopted, I believe crypto and Bitcoin specifically are going to be used in everybody. Everybody's going to use these things in the future. And so it would make sense that if we're going to see a multi-year cycle top, it's going to be coming, once again, right around those time frames. And what I find is interesting is, aside from the time frames, the Elliott wave count is also showing that we could actually be in for a multi-year cycle top, and that would be the next move that's coming. That would be characterized by this bear market that we would be in right now. Keep in mind that if this is a bear market, that we would consider a bear market like this one over here, like this one here, like this one here. This one's definitely a little bit different, but so far it's not so different. All of these ones corrected about 80 and I think this one was 83%, this one was 85%, this one was 90%. And so far we've decreased less and less in every single bear market. These two were pretty much the same. It was almost the same sort of decline. But I mean, where we're at today is most likely going to be pretty much the bottom, whether we peak slightly below. I have a hard time believing that buying the previous all-time highs of the last cycle is a bad time to buy. In fact, Bitcoin has never retested the previous all-time highs of a cycle. And so the fact that we're not actually buying it right now, in my opinion, is just silly talk. I don't think we're going to get a better buying opportunity. The fact that Bitcoin actually hit the previous all-time highs is an amazing buying opportunity, considering we've literally never done that once before. To me, I'm buying. I don't know a better time to buy than right now. Even if we went a little lower, I don't think it matters. Even if we peak slightly lower, it's only going to go 10% lower, if anything. And then if it went lower than that, it's just literally going to die. I don't believe that. I think that now is an amazing opportunity inside of crypto. And it's the last good opportunity that we have until I think we begin a multi-year bear market. And so for that, I'm personally going to do what I can. Once we go into new all-time highs during this next cycle, I'm just going to be taking profits, because this most recent cycle top proved to us that we can't predict cycle tops. We don't know. We can stick to our time frames and stuff, but if we're trying to look at just specifically price action alone, it's not going to give us the most clear understanding. And with us getting ready for a wave 5 and what I believe is the top of a multi-year cycle, it'll most likely end up being, something along the lines of this, where it's a pretty nice euphoric rally. And inside of a move like this, we don't really know when the top is going to be. So all we can do is take profits. I've been holding a lot of these cryptos for over 4 years at this point. XRP, I've been holding Chainlink for 3 years at this point. I've been holding a lot of these cryptos like Ethereum for even longer. And so for me, it's not so hard for me to hold all of these and continue to stick to the plan. I don't believe that then was a good time for me to sell my long-term portfolio. And so for that, I'm holding through all of this. You guys can make fun of me. You guys can say whatever you want. But I don't really care, because I'm still sitting on my crypto. I haven't sold anything, so why wouldn't I just keep holding what I've got? I've seen how these market cycles end up playing out. Even if some of these cryptos die, many of the cryptos I do hold are going to see so many new all-time highs, multi-X returns, that it ends up balancing itself out long term. And so anyways, guys, wanted to give you guys this as a way to basically analyze what I think happens on the big picture. I think that the next cycle could be one that we actually see a bear market last longer than a year, maybe last 2-3 years, I don't know exactly. But I'm getting out during this next cycle. I think that it's going to be a multi-year impulse that will be topping, similar to something that we saw in 2018, but I think that we could actually be in store for a much longer, lengthier consolidation after. So be prepared. This is my update. If you guys found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these amazing videos. If you guys want to join the Discord server, download my free ebook. Links are in the description for that. You guys can also sign up for my video course in Signals, download my free ebook, all of that fun stuff. Links are in the description. Thank you guys so much for tuning in. Thank you for the support. With that being said, I will catch you in the next one. As always, peace out.